Hello friends, this is Raj Sastry from Raj Option Trading. Today is June 7, 2021. I want to size up the recent IPOs since January 1, 2020, 2019. These stocks have got volume greater than 1 million shares. We will look at winners, the losers, most active and most profitable stocks. With that, let's get started here. First chart is all about winners. So as you can see here at the top, we got ANVS, Anavis, and it's done very nicely, 1,443% per year. The way this chart is organized is that we got ticker symbol here and the company, stock price, market cap, and sales. I pay very close attention to sales growth. It's very important to me, as well as gross margin and net margin. And then we got debt to equity ratio. A high debt to equity ratio indicates company has got more debt or more financial leverage, which is not great. And we have ROE, which indicates the profitability of the company. And we got RSI. A lower RSI indicates stock is oversold. It's good to buy at the time if everything else is good. And also we have institutional ownership. A company with a higher institutional ownership is always good to buy. So we got short as a percentage of float. As you look at some of these stocks here, like Jumia, and any stocks which have got more than 10% short percentage, you got to be a little bit careful. Don't buy when they are too high, but buy them when they cool off a little bit. Also look at the RSI. If the RSI is below 50, you are okay to buy some and accumulate. And then let's look at the price to sales ratio. It's a valuation ratio. A high price to sales ratio indicates stock is more expensive at this time. You got to be a little careful there. And then we got performance here: 1 day, 1 week, 2 week, 1 month, all the way to 1 year. And last but not least is how much is the stock off from 52-week high. So if a stock is trading at 52-week high, as example BioNTech, you got to be a little bit careful. You got to wait for it to cool off a little bit. Whereas if a stock is trading, well off of 52-week high, for example Jumia, in this example, it's doing nicely. You could buy some at the time and accumulate slowly. So with that, let's get started here. We got at the top, we got ANVS, nice performance. Next is Mind Medicine, again great performance. I would look at stocks with the positive sales growth. As you can see, FUTU holding, $150 stock, has done nicely from a sales growth perspective, and it's done tremendously well for 1 year, and it's done all the way from 6 months all the way to 1 week. Today it's off a little bit. I would buy the stock on any weakness and accumulate. Next is TIGR UP Financial, $26 stock, positive sales growth. I love this, nice gross margin. It's a Chinese-based stock trading platform, and they also have a net profit margin. Company is making money. It's a profitable 14.4 ROE. Right now, it's a little bit expensive from an RSI perspective. I would not buy, when RSI is high like this. I would wait for this to cool off a little bit. As you can see here, it's up for 1 week, 2 week, 1 month, all the way to 1 day. I think this has to cool off a little bit. As it cools off, I would accumulate more. Next is Jumia. Jumia is one of the favorite e-commerce platforms. It's done nicely, but down 53% from 52-week high. I would buy this company on the weakness and hold it for a long time. Right now, Jumia indicates that it's a little bit oversold. It's okay to accumulate slowly. RSI is 55. BioNTech, we talked about it. It's a little bit expensive at this time. It's above 52-week high. Wait for this to cool off. Canaan is a play on Bitcoin mining. It's a Bitcoin mining machine company. $10 stock has done nicely for 1 year, but 74% off of 52-week high. I would buy the stock on the weakness slowly. It's tethered towards Bitcoin. As Bitcoin improves, the stock price will also improve. We got a couple more here. Revolve, Upstart, Pinterest, Cloudfla, EHang. I love stocks like Upstart, Pinterest, and Netflare. They do very nicely. Upstart is a credit monitoring and a credit card. They will help to look at your credit profile and help the companies, credit card companies. I think this company will do nicely. I would buy this company on the weakness. EHang is a little bit interesting play. This stock used to be very high flyer. They're down 73%. I would wait for this to cool off a little bit, and I will accumulate slowly. Then we got InMode, one of my favorite stocks, $89 stock. It's done nicely for 1 year. I would buy this also on the weakness. Right now it's a little bit expensive, but it's okay to accumulate slowly. And then we got a couple more here, Peloton and CrowdStr. I love both these stocks, especially I love CrowdStr. I would buy the CrowdStr on any weakness. So with that, next we'll look at a couple losers here. Again, you may not find some companies you're tracking because I strictly looked at companies with the volume greater than 1 million shares traded. So with that, at the top we got JFU. Even after this, this 1 year low, stock is still expensive from an RSI perspective. It's 75. So you got to be a little bit careful. Stock has bounced off nicely in 1 week, 2 week, 1 month. Probably, as you can see, there's some short ratio also. I would wait for this to cool off a little bit and buy because it's going up so nicely last couple of weeks. GoTo is a Chinese e-learning play. I think it's got some acquisitions around wrongdoing in China. I would buy very slowly and accumulate. Company has traditionally has done nicely, but off late with the online learning cooling off and China cracking down on the internet. I think internet companies stock has come down drastically. I would buy slowly. Next is Harpoon and OCFT. As you can see here, positive sales growth. I would buy this slowly because of this positive sales growth. And also if you look at OCFT, it's got positive gross margin also. So I think it's good to buy slowly on this weakness. And then we got a couple of my favorites here. I love Fastly, $50 stock. It's come down drastically from 52-week high. Off late, it's slowly bouncing off, which is a good sign. I would buy Fastly on this weakness. And we got a couple more here. Beyond Meat, very high flying stock here. Right now, as you can see here, RSI is 63. It's okay to buy slowly. I would wait for a little bit for this to cool off a little bit. Then you got Medallia. I think it's as you can see, RSI is 61. Done okay, not too bad, but not great compared to other high flyer IPO stocks. Work is being acquired by Salesforce.com. Probably you can ignore as of now. And then we got Real Datadog, IAA. As you can see here, many of these companies are doing nicely. If you see here, IAA has got positive net margin. Companies making money. So I would buy some of these companies like Real Datadog, IAA on this weakness. I will wait for the stock to a little bit cool off a little bit. For example, IAA has already cooled off a little bit. It's good to enter at this point. RSI being 43. Even Datadog, it's right now it's cooled off a little bit. I would buy slowly. Next, we'll look at most active IPO stocks. These are the stocks with the good volume, on a daily basis. So as you can see at the top, we got Sundial has done okay. As you can see here, 42% in 1 year. I would look at the strong players with the positive sales growth. For example, DraftKin has got good sales growth, and same is GSX, which is a little bit epicenter stock because it's got a lot of acquisitions on this company. And also, as you scan through this, I love other stocks also. For example, Roblox. It's a very new IPO. I think they've done nicely. They're down 10%. I also like PaySafe, again, a recent IPO, $12 stock, down 21%. I would pick up some of these stocks here, especially look at the stocks which are at least have good gross margin as an example, and buy some and hold for a while. Next, we look at most profitable IPO companies so far. So this is really organized by net margin of the company and also positive gross margin. As you can see here, many of these stocks have got nice net margin. It's always a sign of good company to have nice gross margin. I would especially pick up the ones which have got positive sales growth, um, and also good gross margin. For example, here, BioNTech, it's a good one. It's got nice net margin and also nice sales growth, as you can see here. InMode, same story. Zoom, Zimmer, um, Maravai, same story. I would pick up some of these stocks which are highlighted in bold. These are great stocks to buy slowly into any weakness and take it from there. So with that, thank you very much. Happy investing and trading. Please subscribe.